Hello there, my name is Elliot Tawanda Woninyika and I'm with the Child Accountants Academy, and welcome to this lecture session where we are going to be discussing business models and disruptive technologies. So this topic is part of the broader topic on corporate strategy. So the idea or the emphasis behind this topic is for you to be able to develop a corporate strategy, you need to have a deeper understanding of a business or entity's business model. How does the company make its money? What are its value drivers? And from there, you can then be able to discern a business corporate strategy as well as how it's going to proceed going forward. So coming back to our learning objectives. So this has been extracted from our competence framework. So the main objective here is for you to be able to understand. So this aspect is very important for me. Understand and evaluate the business model. And what are we trying to do here? The moment you are able to understand an entity's business model, it means you now have an in-depth view of how the company is bringing value to its customers and stakeholders. And also you should be able to evaluate an entity's business model in terms of its key building blocks. So evaluation can then be linked to your ability to develop a corporate strategy. Where is the company presently? What is its business model? Therefore, going forward, what should we do? Which is part of the building of a corporate strategy. Then you should also be able to link an entity's business model to its reporting in the context of an integrated report. So if you go to the requirement of an integrated report, you should realize that within the integrated report, entities are expected to also report on their business models. But above all, the main importance of this lecture is, or this topic, whenever you get in the examination, okay, chances are high you are not going to get a requirement which will specifically ask you to describe an entity's business model. But for the purposes of understanding the scenario, it is fundamental that you put a deep understanding of an entity's business model. Why? Because there's no way you're going to be able to, for example, to do a risk analysis for a company if you don't know or if you don't have an understanding of its business level. So the most important thing here is before you do anything, so imagine you are the CEO of Econet or you are the CEO of Zimplats. The first thing that you need to do if you are a new CEO for that company is, do I have an understanding of Econet's business model? Do I have an understanding of Zimplat's business model? And then from there you can be in a better position to interrogate its strategies and drive its corporate strategies. So the question is, what therefore is a business model? Simple question. So there are various definitions that are out there that try to define what is meant by business model. So some schools of thought describe how a company creates, delivers, and captures value. So in other words, when you look at a company, why has it been said? What value is it creating? How is that value being delivered to its customers? Or to put it more plainly, a business model should be able to identify the source of revenue. So in other words, how is a company making its money? And who are the company's customers? What products or services are the companies selling? And how is the company also financed? So when I give you a scenario, especially during the reading time, you should be able to have answers to these questions. What is the entity's source of revenue? Who are the business customers? What products and services are being sold by the business? And also have an overview, understanding of how the company is financed. So to further interrogate or analyze an entity's business model, we are going to next discuss a concept around the building blocks of a business model. So here we are now putting everything into context to say, when I now go into the final detail, how exactly can I break down the business into each individual components for me to be able to understand a company's business model? So for these 9 blocks that we are going to focus in discussing this lecture to say, how do they assist you in understanding and interpreting how a company is creating and delivering value to its customers. So we are going to start off with customer segments. So here we are saying, who are our customers? So segmentation effectively saying Practically, as a business, you can't save everyone and anyone. You need to be able to take a step back. Who are we trying to save with the products and services that we are offering? I can give an example of CAA for our CTA program. So if I'm going to define my customers for the CTA program, I'm looking for those with an undergraduate degree. That's my customer segment. But an undergraduate degree is not just any undergraduate degree, but an accounting degree. So it means within all graduates, my segment is specifically those with accounting degrees. So here segmentation can be done using a number of parameters. Examples which include can be based on age, gender, it can be based on income, it can be based on occupation, it can be based on understanding of data pricing. So if, for example, if you look at a company like Apple, they've done some sort of segmentation. Most of their phones cost approximately more than $1,000 United States dollars. So effectively, which types of customers is iPhone targeting? Those that can afford, or those who are in the high income bracket. So they've segmented their customers. So when I give you a case study in the exam, when you're analyzing a case study in the examination, you should be able to answer this question: which customers are being targeted by this entity? And if you can drill down to the specific customer segment, that would enhance your understanding even further. Then the next building block is the value proposition. So I find that most businesses were started based on a problem that needed to be solved. So in other words, when a customer is coming to us, what value are we giving to the customer? So value propositions can come in a variety of ways. Some can say we are guaranteeing quality of performance. For example, if you look at a Mercedes-Benz versus a Toyota Ranex, when someone is buying a Mercedes-Benz, what they are buying normally is the quality of performance. To say Mercedes, they are saying the value I'm going to give you is quality of performance. Then customization. If you look at a car like a Lamborghini, what those guys are saying, we can customize the vehicle to your taste. That's the value proposition you want. So maybe a customer who wants to be the only person owning that type of vehicle, then maybe Lamborghini will be the right company for you. So that is the value proposition coming from Lamborghini. Pricing can be a value proposition. So if you look at a company like Huawei, the reason why they've grown in leaps and bounds has been their pricing value proposition, when they've been able to target the low end or the lower income earners, which if you look at the global demographics is the biggest population base as far as the global population is concerned. So the value proposition is the pricing. So this can be built further to say, what are we offering? Risk reduction. So in insurance company, when they come to you, what are they selling? They're saying, my friend, if you give me this premium on a monthly basis or on a periodic basis, I'll be able to, the product that I'm selling to you will assist you in a risk mitigation and management. Or it can be around flexibility. So in other words, each business should be able to define what value are we giving to our clients. What is the value proposition? So whenever you're reading a case study or scenario, you should be able to answer this question: what is the value proposition of the entity I'm looking at? So moving on to the next building block, channels. So channels effectively is saying, how is a company going to reach its companies? So how are we going to be distributing our products and services? How are we going to be communicating with our customers and key stakeholders? And channels, then we identified two broad categories, being in indirect and direct channels. So direct, we are saying there's no intermediary in between. It's from me as the business direct to my end consumer. So if I look at a direct channel, or just to crystallize this in an example, if you look at this diagram, it's saying when you look at our channels, we got a producer, and from a producer, are we going directly to the end consumer? So if I'm not going directly to the end consumer, it means I'm using an indirect channel. So let's look at a company like National Foods. So National Foods manufactures the Mahatma range of rice. Does National Foods sell directly to the end customer? No. So National Foods sells to wholesalers like N. Richards, Gaines Cash and Carry, and also to some actual retailers. And those wholesalers like N. Richards then also sell to those small stores, even other retailers. And then those guys then sell the product to the ultimate consumer. So it means National Foods is using indirect channels to sell its Mahatma range of rice. Then if you look at a company like Battery Express, so Battery Express manufactures car batteries, and they've got Battery Express shops where they directly sell to the customers. But also Battery Express sells to retailers such as Mohamed Musa. So it means that business is using both direct channels and indirect channels. Okay, so obviously when you're looking at channels, when they go indirect or direct, it has got its own pros and cons. But you find nowadays most businesses are now doing a hybrid of having both direct and indirect channels. So therefore, we find that given the dawn of the internet, we've been breaking down global barriers. So we find that most businesses are now going for international expansion. So when you are going to be expanding internationally, you then need to ask yourself, how are you going to reach your customers? I'm a business based in Zimbabwe and I want to pursue international expansion. How do I reach a customer in Zambia? How do I reach a customer in Europe? How do I reach a customer in China? So it brings us to this. There are various ways in which businesses can achieve this global expansion. So it can be via exporting or importing. So in other words, you're saying, instead of setting a business in Zambia, I'm going to export to Zambia. Or someone can say, I can set up a foreign distributor in Zambia. Or I can be a foreign distributor of Apple products in Zimbabwe. So that's a channel that I'm using. Or I can enter into a joint venture with a business in Botswana. And my partner in Botswana is then the one going to be my distribution channel. Or I can acquire a business in that foreign country, giving rise to a foreign subsidiary. So I find these are various, the content that then comes through from a channel perspective when you are looking at global expansion. Then the next building block is customer relationships. So I find that any business with its salt is going to be worried about how does it relate to its customers. Why? Because the success of any business is dependent on how it relates to its customers and whether or not customers are still going to be able to buy their goods and services. So there are different customer relationships that can be created. It can be individual, personal assistance. So for example, in banking, they would want they call private banking, where they target high net worth individuals. So it means when you go to that bank, you go into the bank where you're served coffee, teas, drinks, etc. Where the bank want to have a direct relationship with you. Or you can have general personal assistance, product support. So let's say, for example, I bought a motor vehicle from Zimoko. And as part of the package, say, they also are going to give me support, after sales support, in servicing the vehicle. So that's general. If I go there, I get a general service that is around support over my vehicle. And these days, automated services are getting traction, whereby you are getting online support. So for example, if you're looking at the airline industry, how have they created relationships? So a customer wants to book a ticket. They can simply go to the airline's website and then online book a ticket. So effectively, the business or the airline is related with its customers, but using an automated services. And others have now used the concept of communities. So in this one, you are saying, and this is popular, if you look at a company like Google, and when they are looking at all the apps that they develop, they create these online communities where they use the concept of collaboration, where customers collaborate, share ideas up until they come up with a fine-tuned products. So these are various customer relationships that can be created by a business as part of its business model. Then the next building block are the revenue streams. So revenue streams I think it's one of the core items. Yes, we now got the customers. Yes, we've got now the distribution channels. But how exactly are we going to make our money? So nature of revenue. Transactional versus recurring. And that is very interesting. So transactional revenue is more once-off type of revenue. So for example, if I go and buy a motor vehicle, it's a type of once-off revenue. But a recurring type of revenue is normally those are your subscription-based revenue, where I either pay monthly, biannual, or annual. And you find that most big businesses are now going through the route of recurring revenue streams. So a classic example is Microsoft. So some years back, you find that for you to have access to Microsoft Office, you need to pay a once-off fee. So it means at that stage, Microsoft was earning transactional revenue. But with the advent of Office 365, Microsoft is now moving more to a recurring revenue type of model, whereby you buy an annual license for Office 365. So obviously, if you're doing the math, in the long run, recurring revenue streams, you're going to make more money versus transactional revenue streams, because recurring revenue streams, you lock the customer in onto your platforms. And then also there are issues around transactional versus ownership. Should someone own, or I can give them a leasing arrangement? So we find a classic example is, instead of me selling the building to you, then I get a transactional income. But I say, okay, I'm going to lease the building to you, then I get recurring revenues over time. So whenever you're analyzing a business, ask yourself, how exactly are they earning their money? And what is the nature of their revenue streams? And I know from a financial reporting perspective, you can then already start to think about maybe your IFRS 15. If it's a taxation perspective, you're already thinking about gross income perspective. When we incurred or earned the income. Okay, then the next building block are for you to be able to bring this value to your customers. What key resources do you require? So resources can be anything. It can be physical facilities, it can be financial resources, it can be intellectual and human capital, licenses, intangible assets, etc. And you're going to see that for most global businesses, these days, you look at most business companies, big companies like Amazon. So Amazon is an online retailer. So Amazon may not be big on physical infrastructure, but they carry a big intangible asset being their platform. So these days, I'm sure from a business perspective, you might realize that businesses are now moving more away from having key resources in physical infrastructure, but more towards intellectual property, which also forms the key resource. So financial resources, you have the money. We have got a highly skilled workforce. Or our CEO is a key strategic driver. So that can be a key resource. Our relationships with key constituencies. So for example, when I look at CAA, our relationship with the Institute of Chartered Accountants of Zimbabwe is a key resource. Our relationship with our clients is a key resource. So you need to define to say, for this business to function, what resources does it require? And how has it been able to harness and enhance those resources? Then the next building block is key activities. So now for us to deliver this value to the company, what internal activities are very, very important? So for example, if you look at a retail company, let's look at OK Zimbabwe. For them to deliver value to their clients, inventory management is an important key activity. Why? Because they've got a wide range of inventory items. So if they mess it up in that area, they're going to be in trouble. Or if you look at Apple, they are selling a premium product. So it means product design then becomes a key activity in their business processes. Or if you look at a pharmaceutical company, they are always looking for new disruptive drugs. So it means the research and development then becomes a key activity. These days, most businesses, they are being digitized. So what does it mean? IT systems then become a very important key resource in key activity in any business process. So here, these are just examples. So it means when you are given a case study in the exam, from your understanding, have you been able to identify the key activities that are being executed in the organization to be able to deliver the value to the entities? Then the next building block, key partnerships. Businesses do not operate in a silo. Businesses rely on their partners, stakeholders. So when I look at CA as an example, what key partnerships do we have? We've got key partnerships with ICAS in offering our CTA program, because together we are then able to deliver on the CTA program. Or if you look at entities operating in the mining sector, if ZESA struggles, they are also going to struggle because they are not going to have the electricity to power their operations. Or if I'm a manufacturing entity which relies on input from a supplier, that supplier is my key partner. If that supplier goes down, it means my supply chain is going to be affected. So it means key partnership are saying what businesses, entities, or individuals play a significant role in you being able to deliver the value that you have promised to your clients. So a partner can be anyone. So when you read your case study or scenario, are you able to identify a business key partners? Then the last building block of a business model is a business's cost structure. And this component is very important. So obviously cost structures are then become a function of the key activities as well as the key resources that we are utilizing as part of our business model. And you find that a business is always saying, for the cost I'm incurring, what value am I giving to my customers? And normally it can then be broken further down to saying, from a cost structure perspective, am I going for a fixed cost structure versus a variable cost structure model? And normally, for example, if you look at the Zimbabwean situation at the moment, things are tough. So most businesses would want a cost structure which is variable and less of fixed. And cost structures, someone can say, okay, I can have these huge cost structures, but I'm going to recover my structures via economies of scale. So it means each business needs to define the type of cost structure that it wants to pursue. Do you want to be a cost leader, or do you want to be a value? Do you want to be a value leader? So looking at all these 9 business building blocks, whenever you're interrogating a business, make sure you're able to answer the questions around the 9 building blocks. What are its cost structures? What are the business key partnerships? What are the business key activities? And from there, you'll be able, one, to understand the current position of the business, and going forward, you'll also be able to define and formulate its corporate strategy. So the next step, please go to part 2 of this video lecture recording, where we are going to discuss how digitization is now disrupting some of the set business models. How are businesses now incorporating technology in their business models? And thank you very much for taking time to watch this video recording. See you in part 2 of this lecture session.